Xi Jinping is like a dragon hoarding gold in a cave full of treasures. It's not just collecting, it's building an unbreakable shield for the future. That's China right now, snapping up gold like the world's running out tomorrow. For 10 straight months, the People's Bank of China has been adding to its shiny pile, and April 2025 was no different. Gold reserves hit 73.77 million ounces by month's end, up by 70,000 ounces from March. This isn't a quick grab, it's a steady march, turning gold into a bigger part of the country's money stash. Why? Trade fights with the US under Trump are shaking things up, and Beijing wants something safe that no one can freeze or steal like dollars or euros. China's total money reserves jumped to $3.28 trillion in April, a boost of $41 billion from March. That's thanks to the dollar dropping 4.4% as Trump's tariffs kicked in, making other currencies and assets worth more. But gold? It's the star. Experts say central banks worldwide will buy around 1,000 tons this year, with China's share leading the pack. In the first 3 months of 2025 alone, China added 160 tons. It's all about ditching dollar risk. Remember how Western countries locked up Russia's dollars? China learned the lesson fast, selling off US bonds down to under $800 billion now, and stacking gold instead. No more trusting paper promises from far away. Gold is real, portable, yours forever. This buying spree isn't just numbers on a screen, it's changing the game for everyone. Gold prices shot past $3,200 per ounce in April, the highest ever, jumping 9% in 3 days alone. That's the biggest leap since the COVID chaos in 2020. Blame the Trump-China clash, tariffs up to 145% on Chinese goods, sparking fears of a US slowdown. Investors panic sell stocks and bonds, rushing to gold as a safe spot. From January 2025, prices are up 23%, and over 2 years, nearly 60%. The dollar index crashed to 99, its lowest since 2022, while US bond yields spiked to 4.5%. Everyone's betting on trouble. Recession talk is loud, and gold's the go-to hideout. Russia's in the mix too, feeding China's hunger. Hong Kong, a key doorway, bought over $1 billion of Russian gold in June 2025, double May's haul and triple last year's. Russia climbed to 3rd place as a supplier, behind the UAE and China itself. For the first half of 2025, it's $2.9 billion, a threefold jump from last year, the biggest in 13 years. Why Russia? Sanctions mean discounts, $20 to $50 off per ounce, making it a bargain. Before 2022, London was Russia's top buyer. Now Asia and the Middle East step up. Russia's gold mining boomed 5.3% in 2024 to 330 tons, second in the world. Companies cash in big, costs in rubles, sales in dollars, and with the ruble weak, profits double. But it's not all smooth. China used to hide these buys to dodge US backlash. Tons of gold purchased in 2023 were secret. Now it's bolder, shifting to open deals as the yuan grows stronger and dollar fears fade. Russia's central bank stopped buying domestic gold in 2022 to fight inflation, grabbing 2/3 before, about 200 tons a year. That gold helped shield reserves from Western grabs. Experts push for restarting. Gold's a buffer against shaky times, and prices could hit $3,500 to $3,700 soon if trade wars heat up. For everyday folks eyeing gold, it's a wild ride. Prices swung hard in April, topping $3,500, then dipping below $3,300. Now at $3,400, it's volatile as ever. A 5% swing is normal, but with bases so high, real losses sting. Experts warn, risks are up, so play safe. Skip big loans or wild bets. Stick to steady holds. Gold's backed by trade chaos and bank buys, but a US rate pause or deal could pull it back to 30.80 short term. Zoom out, and China's gold rush fits a bigger picture, ditching dollar chains. Pre-2022, China held over $1 trillion in US debt. Now it's third at under $800 billion, with Japan and UK leading. Selling bonds, buying gold, it's insurance against freezes like Russia's. Gold's not just shiny, it's power in a shaky world. As tariffs fly and recessions loom, central banks stockpile. Turkey, India, Kazakhstan too. ETF funds hold 2,756 tons now, up 153 tons this year, with $24 billion poured in since January. Russia feels the shift. Pre-war, Europe took half its exports. Bans flipped that. Coal mines idle without Western gear. Chinese stuff lags, orders wait years. Steel slumps 10% on weak building and strong ruble hurting sales abroad. Banks fret bad loans, eyeing government aid. Assets seized tripled in value last year, scaring bosses in Putin talks. It's like national takeovers, handing wealth to friends as cash dries up. Labor's tight too. War drafts and folks fleeing leave gaps. Unemployment's 2.3%, but it's fake. Millions gone, wages up, prices soaring. Oil's 30% of budget, easy prey to global cuts or sneaky ships dodging caps. China buys cheap, sends basics, but skips high-tech over sanction fears. India helps, but tricks cost more. New routes, hidden imports. Sanctions bite slow but sure. GDP shrank just 1.4% in 2022, beats the 8% fear. But 2025's 0.9% growth, 1% in 2026, it's stall, not surge. Military eats 21% more early year, prepaying deals that blow holes. War factories stall. Civilian life crumbles. Car sales down 30% in June. Factories shrink per indexes at 47.5. Savings funds down 71% to 30.5 billion euros, barely patching gaps. Putin's all in on Ukraine, legacy like Peter the Great. But experts say civilian economy suffers. Recession edges closer, per the minister. Fortress on sand? It's washing away. Not loud, but steady, with deaths, lost jobs, fading hope. West's lesson, pressure works, just takes time. For Putin, bets legacy versus empty pockets. Russia's economy whispers, pockets win. China's gold grab? It's smart play in chaos. As prices climb and dollars wobble, it's not hoard, it's hedge. For investors, watch steady, not wild. Gold's safe, but swings hurt. Trade wars fuel the fire. Peace could cool it. But with Trump pushing tariffs, Dragon keeps stacking. Gold by gold, world by world.